We're going to start by deriving the accounting equation. Now, the accounting equation forms the basis of most accounting courses and is normally given upfront as something that students need to memorize off by heart. I'm not going to ask you to do that today. We're going to derive it together, and the equation that we derive will form the basis of where we go today and form the basis of this course. So listen very, very carefully. I'm going to derive the accounting equation by talking through a simple scenario of you buying a car. So here we go. Here's a picture of your car, 300,000. And I'm going to put this blue car in the blue section. How did you fund your car? Well, you funded it with some borrowings, and the bank lent you 240,000. I'm going to put the 240,000 on the red side. But as you can see, we have a shortfall. We have a shortfall of 60,000. Where are you going to get the 60,000 from? You would have had to have saved up to have that 60,000 to pay in the difference on your car. I'm going to represent this 60,000 by your heart to show that your heart is in this car. You're invested. You've put your own hard-earned cash into buying this car worth 300,000. Quite an expensive car, I might add. Okay. So we see the blue side equals the red side. Let's now look at the components. What composes the blue side? What composes the red side? So I'm going to choose a very simple word to represent this 300,000 car. The word own. You own your car. What represents this? The 240,000 loan that you took from the bank. I'm going to choose the simple word owe. You owe this money back to the bank that lent it to you. And to represent the 60,000, to show your heart is in this, you've put a deposit down on this car, I'm going to choose the words owner's share. You have an owner's share in this car to the tune of 60,000. Let's put that over there. So we see the side has one component, but the side where we sourced the funds from, both from borrowings and from your own pocket, has two components. I'm going to use a line, a straight line, to separate the two components of funding that took place on the red side. We can also now see that this side, what we own, equals what we owe plus the owner's share. Can you see that? 300,000 equals 240,000 plus 60,000. Now I'm going to introduce some accounting words. What is the accounting word for things that we own? You may have heard this word, assets. Assets is the accounting words for things that we own, for things that are in our control. What is the accounting word for things we own? I'm sure you've heard this word too. Liabilities. Liabilities implies things that we owe. And the accounting word for owner's share is the word equity. And that's going to live over here. I'm going to shift this owner's share to that side. We have now derived the accounting equation, which is simply assets equals liabilities plus equity. But I didn't ask you to memorize that. We derived it from first principles, and we saw that there's another way to verbalize that equation. What we own equals what we owe plus our owner's share. And if we go one step deeper, we see that this blue side simply represents what we have. You might have a car, you might have a house, you might have a bank account, you might have a computer, you might have a cell phone. These are all the things that you have. This side represents where we got the funds to have what we have. And there are always going to be two sources. borrowings and owner's share, or in accounting terms, liabilities and equity. It might be that there's zero equity in a particular case, that you have funded your asset all from borrowings. Or it might be the other way around, that there's zero liabilities, that you funded your asset all with your own heart, all from your own contribution. So essentially this line could be all the way up there or all the way down there. It will shift depending on how you're choosing to finance what you have, what exists on this side. We also call this in accounting, this picture that I've set up over here, we call this in accounting a balance sheet, or it's also known as a statement of financial position. Why a balance sheet? We can see that easily because this side balances to this side. There's a 300,000 Rand, there's a 300,000 here, and there's a 300,000 on this side. Why statement of financial position, which is the balance sheet's other name? Because it essentially tells you what is your financial position at a point in time. So if today was year end and all you had in your possession was a car, we'd want to know what is your statement of financial position. So you have a car, that's your asset worth 300,000. How did you fund that car? You funded it from a 240,000 Rand loan and from 60,000 of your own share, what you contributed from your own pocket. So essentially, in summary, what have we derived here? We've derived the accounting equation, which simply represents at a point in time what we have and where we got the funds to have what we have. We know that the accounting equation is assets equals liabilities plus equity. We know this picture also represents a balance sheet and that the blue side balances to the red side. And now you have the fundamentals to start working with this picture and running a business. And that's where we're going to go to now. We're going to start running a business. So stay with me. This is just the beginning.